share my screen. Okay, so we are going to talk about investment sectors, all right? One of the things for a long time, and it's really just recently I started looking into this. For a long time, I thought stocks were stocks. You had different types of stocks. Yes, you had industry. So a stock was a manufacturing stock. A stock was a tech stock. A stock was a financial stock. That we all understood. However, what I didn't know and what I actually had to look into were the segments that these industries fall into. And so that's what I'm going to talk about today. Not necessarily the industry. We know the stocks fall within a certain industry, and now the industries fall within the sectors. All right. And so when you're looking about building your portfolio, it's important to understand this. So you're ready to go ahead and start building your investment portfolio. You've gone ahead, you've listened to my talk, so you've got your unplanned funds, you went ahead, you're ready to go. Now, what do you invest in, right? We already spoke about risk and all of that, so that's not what we're going to talk about today. But where do you start, right? Well, one of the things is that you need to realize that stocks perform differently based on the stage in which the economy is in, right? So this is why when talking about stocks and talking about investments, it's important to also talk about the economy as a whole and for you to get an understanding of what is going on from an economic stance as well, because it plays into what stocks you're going to look at. Now we know, as we described last time, when inflation starts to go up, you're moving within a period of what they call expansion. When you instead of inflation, now you have deflation, you're moving in a period of recession. You have your peaks, which is at the top. And then you have your depression, which is at the bottom, okay? So you have your expansion, you're climbing, you reach to your peak, then you start going through a recession, and then at the bottom, you have your depression, okay? Stocks perform in all of these, you can come out a winner, right? I'm sure you guys have heard of the people who made billions off of the housing bubble that happened and the financial crisis that happened during 2008. People came out to be millionaires. However, you had people who went dead broke. How did those people who became millionaires become millionaires? Because they understood how the investments worked during different periods, which investments liked a recession, which investments liked an expansion, and poise themselves just right for that, okay? Because what they do is they go ahead and they make their adjustments at the peak and at the depression, okay? So if you're going ahead and you realize that you're in a depression, then you know when you're positioning yourself for the expansion, okay? So you want to look at stocks that do well during an expansion period. Position yourself in those stocks. Yes, it may look like, oh, they're going down, but no, those are stocks that didn't do good in the depression. So you're buying them low, you're running them up to the peak, right? You realize you're about to head on another deflation period, and those stocks won't do good. You sell, you collect those profits, and then put them in areas that do well during a deflation period. Okay, so when you hear people saying, oh, we're reallocating our portfolio, and that's what they're doing, all right? Now, you need to understand the sectors, and stocks fall within 3 sectors. Remember I said the stocks, then the industry. So it's better I said the industry, right? So the stocks falls within a certain industry, and the industry falls within a certain sector, okay? And there's 3, and each sector performs differently with the economy, right? So what the areas that I just spoke about on the previous slide, these 3 act differently. So you have cyclical, you have the cyclical sector, you have the sensitive sector, and you have the defensive sector. I know that had to sound funny because I have a list on and all of those S's, but hey, can't do anything about it, okay? So you need to understand those 3 terms. And that is what they were talking about on Bloomberg when they say, oh, the cyclical stocks, they're going to do well. And I was like, what are these cyclical stocks, right? Am I in cyclical stocks? I don't know. So I said, you know, I really need to look into this. Now, let's start off with the first one. We have cyclical stocks. Now, cyclical stocks are the stocks that will do well during an expansion and a boom period, okay? What they are stocks whose underlying fundamentals, remember we spoke about the fundamentals, the underlying fundamentals of the business is one in which it's sales driven, right? And you know, during an expansion and a boom, sales tend to increase. And so that means that their bottom line and their EPS is going to increase during an expansion and a boom. Now, what happens during a recession and a depression? People spend less, sales decrease, profits turns into losses, EPS bottoms out. So do you want to be in those stocks during those times? No. If you want, that is the time that you would go ahead and do some reallocation, protect those profits and put it into something that is going to do well during the recession and the depression period. Okay, so when you hear them saying, oh, the cyclical stocks, and that is why they're saying that cyclical stocks are going to do well into next year. Because of this inflation period, we're moving into an expansion and a boom period, right? As you can see from the graph there, it's the wave. And at the tail end of the depression, you see that it's expanding up, going into an expansion period. That means that cyclical stocks will start to do well. So if you're looking at building your portfolio or doing a reallocation of your portfolio, you want to start looking at some of these cyclical stocks, right? Now, what are these cyclical stocks? Well, the cyclical stocks are any stocks whereby when the economy is doing good, they're doing good, right? So just think of that. Just think of all of the businesses that you know that are dependent on people having extra money, right? Airlines, people are going to travel. Hotel, anything in the leisure industry. So retail, people are going to start doing more shopping. Restaurants, people are going to go out more. Automakers, people are going to feel more comfortable to buy cars. Banks, people are going to be more willing to not only put their money into banks, but because of their financial situation, they're more likely to take out a loan because they'll say that they have the job or have the funds to repay that loan. So banks do well. Construction, you guys are seeing it when you look at the Jamaican climate right now. There's construction going on everywhere, right? Because that's an expansion activity. So when you realize that you're in the expansion phase, you want to look at stocks that falls within these areas to go ahead and start adding to your portfolio. Or if they're already in your portfolio, beef it up, because chances are they're at their lows now because they're coming off of a recession. All right. Sensitive stocks, right? What are sensitive stocks? Well, we already spoke about cyclical stocks that do very well during expansion, do very badly during a depression. We will talk about defensive stocks next, but sensitive stocks falls in the middle of that, right? That's really their middle ground. What that means is in each, even though during an expansion they'll do well, and a depression and and during a depression phase, they're going to go ahead and do badly. The swings are not as great. Okay, so you're not going to see the massive gains, but then on the same trend, you're not going to see the massive falls. Okay, and these tend to have a beta close to 1. Remember when we spoke about the fundamentals and talked about beta, where 1 is essentially the index. So if you're in Jamaica and there's a stock and the stock has a beta of 1, that means it's moving in exact correlation with the JSE. So if the overall JSE index goes up, that stock goes up. If the overall JSE index goes down, that stock goes down. That's a beta of 1. And so these stocks tend to have a beta close to 1, right? So it's not going to give you the big gains, but then it is not going to give you the big losses as well. It's going to be moving with the average, all right? Now, what are the type of stocks that are sensitive stocks? Well, you have communication services, right? Like T-Mobile, Digicel, right? You have energy, like Exxon, BP, industrials. I don't know why they call them industrials, but one day I'll look it up and tell you. But like Boeing and GE, right? Which we know they're not doing that great, right? But they're not doing as badly. They're not doing as great. Remember, I didn't say that these stocks would always be doing good or won't suffer any decreases. They're going to suffer decreases. It's just that because of their business model, it's kind of spread out a little more, right? So like Southwest that took a tumble, right? GE also took a tumble. But would GE tumble as much as Southwest? No, because GE is also in other areas. Southwest is airlines. GE is in airlines because they make the engines. Boeing is in aerospace. Boeing is in other things, right? So they have other revenue streams. Yes, they feel a hurt because their major revenue stream is airlines, but they have other revenue streams that tend to help them out, okay? Then you have technology, Google and Apple, right? That during this time, we saw them take off, right? Especially Apple and so forth. We saw them take off, right? Now, this is we saw them go up during a period where the cyclical stocks tumbled, right? So they're not cyclical, right? However, there are times that when you look, technology stocks go down, okay? So these are the types of sensitive stocks, right? So these are middle of the ground stocks, and middle of the ground stocks you hold, right? You tend to hold them because yes, you're going to get some gains, you're going to get some losses, but it's not that extreme that it should tear down your entire portfolio, okay? That's why if you buy an Apple stock, even if Apple go down, everybody always say just hold on to it, right? It's a sensitive stock. The last one that we're going to talk about is defensive stocks, right? No, defensive stocks is the opposite of cyclical stocks, right? Defensive stocks are stocks that no matter what is going on in the economy, yes, their demand does not go down, right? That is a fantastic situation to be in, where even if you're in a recession, people still need your product, right? So when you're going ahead and you are looking at defensive stocks, one of the things to realize is they tend to be more of the dividend stocks. Those are the stocks that you hold, they're going to give good dividends, and you just keep on trucking with those. And so you say, well, why don't I just keep on buying defensive stocks, have an entire portfolio of defensive stocks, and then just reap dividends? Well, your portfolio really isn't going to grow as much, right? They're stable and they tend to move in a flat line. You want your portfolio to move up. So you need a mix. You need some cyclicals, you need some sensitives, but it's important for you to know, okay, the cyclical it's easier to absorb the risk when you know a hit is coming, right? So if you know that you're moving during a period of recession, you go ahead and say, okay, what I may do is move some of the profits from my cyclicals into my defensive stocks, right? Now you see why they call it defensive, because people like to ride the cyclicals because they give the really big gains, right? And what they'll do is that they'll keep some defensives. So in times when the cyclicals are going to start doing bad, they farm off the profits off of the cyclicals, put those in the defensive to hold them. And then what's that also going to do? That's going to beef up the amount of dividends that they're going to earn during this time of recession. Okay. Now, what are the dividend? What are these defensive stocks? Consumer personal products, toilet paper, toothpaste, toothbrush, soap, tobacco, right? They've proven with cigarettes that no matter what period the economy is going through, no matter how much inflation, extra tax, and all of that you put on tobacco, tobacco is still a multi-billion-dollar industry that has no set of slowing down, right? That's called consumer defense. Then you have healthcare, Johnson & Johnson, Pfizer, right? We've seen them do well now because with the pandemic, you know, they essentially brought out the vaccines. Yes, that gave them an extra bump. But even during the down times, you need them, right? Because why? People are still going to go to the hospital. People are still going to get sick. People are still going to need medicine. People are still going to need their products, right? So whether or not nobody is saying, oh, we're going through an expansion period, now I can go buy some more Pfizer. No, right? You get that because you got sick. And whether or not you got sick, it doesn't matter how the economy is. You have to go ahead and you have to go to the doctor. You have to get the medicine, and boom, they still get their money regardless, right? The other one, utilities, Georgia Power, JPS. It doesn't matter. We could be going through a depression. You're going to pay your light bill, right? You're going to pay your light bill. You might go ahead and say, oh, I'm going to cut my cable, which is why telecommunications is not in this, right? But you need your light, right? And so, or you need your natural gas. You need basic utilities. And so those companies tend to be good defensive stocks, right? So if you see that we're hitting onto a recession, boom, let us say I'm not wishing any of this to happen. I do not want a recession, right? Although, let's face it, recessions, because it's the curve, But what we don't want is a depression, right? We'll always have an expansion, we'll always have a boom, and we'll always have a recession, okay? If you think that, oh, we should never have a recession, and then no. Economics say you always have expansion, boom, recession, okay? What you don't want is a peak, right, which is at the top, to stay too long. And you don't want the trough, which is at the bottom, to stay too long, okay? That is what you don't want, but you're going to have the waves. So now if you can go ahead and pinpoint which stage of the economy we're in, then it's going to let you look at your portfolio a little differently, and you will know how best to position yourself to where during that period you are not killed, okay? And this is why at the beginning of a recession, all of a sudden, you will see in one section massive sell-offs, and you see all over the news, oh my gosh, there've been these massive sell-offs and so forth. It's usually in the cyclicals, right? Everybody sees that the economy is going down, and so they're moving their stuff over into the defensive stocks, right? It's not like they're going ahead and saying we're doing massive sell-offs and putting the money underneath the couch. All they're doing is reallocating funds from one sector into another sector, okay? Now, how do you go ahead and just say, okay, I am going to buy Scotia shares, I'm going to buy Digicel shares, and I'm going to buy JPS shares, and boom, I'm completely covered. I don't need to do anything else. No, right? What you want to do, and what I did, is you have different allocations, and at the end, the allocation is based off of what you feel comfortable with. The allocation that I'm presenting here is not necessarily a guide for you to say, oh, Warren said I have to have 39 point. No, it is just an example. And this one I took off of Morningstar, of how you can allocate even within these sectors, okay? So remember, within the sector, you have the different industries. And so even though your stock falls within a defensive sector, or this sensitive or a cyclical, you don't necessarily want to say, oh, okay, let me put all of my chips in that because I have cyclicals covered. No, there are other aspects of cyclicals, and you actually want that spread out. Because even though even though we're moving into an expansion, there's certain areas of the expansion that do much better than others. So for example, you're looking for cyclicals. You're in Jamaica, and you see all this construction going on around you. Are you going to go ahead and say, okay, I'm going to put all of my money into basic materials? No. You're going to go ahead, and they said 7.8%. You might say, no, I'm going to go ahead and put 20. I'm going to go ahead and allocate the 14.6% into real estate, and then put the 7.8% in financial services like Scotia or NCB, right? So within each of these sectors, you do still want to have some investment in each of these industries, right? And then all you're doing, so sometimes you can actually have reallocations within one sector. So you can go ahead and realize that, oh, financial services are set to do much better than any of the others. You can go ahead and say, okay, financial sector, I only had that at 6%. Let me shave off a little bit off of basic materials and consumer cyclicals to beef that up. So that is how you do it. Okay. So when you're going ahead and you're looking at your portfolio and you're looking at how best to diversify your portfolio, it is important to not only know the name of the company, the fundamentals of the company, the industry that the company is in, but also what sector is the company in, right? Because based off of the sector, it will essentially give you a snapshot at when best to invest in that stock, when best to sell that stock if your goal is to sell it at some point, and how best to essentially have a portfolio that at any one moment in time, you're not killed, okay? All right, guys, so we have reached the end of this week's presentation. I know that some of you have been looking for the video of last week. No, you're not seeing things. I've not posted it yet. I will make sure that tonight I'm going to post both that and this video. And so you will have both of them up. I love the support. I love all of the conversations. As I say, a lot of times I get my ideas from the conversations that I have with you guys. I love when you guys ask me questions and send me to the research, to do research. It really keeps the brain pumping and all that. So thank you for coming out, guys. You guys have a good week, and I will see you next Thursday. Same time, same place. All right? Have a good one.